Most people think that buying a home at a 7% mortgage rate is crazy, but what if I told you it might actually be the smartest move that you can make? At the moment, a lot of people are hitting the pause button when it comes to buying a home, thinking, I'll just wait until mortgage rates come down. But what if that strategy ends up costing you more money in the long run? By the end of this video, you'll understand why locking in now could be a financially sound decision, and why waiting might end up costing you more than you think. At the time we're filming this video, mortgage rates are sitting around 7%. And the problem is, a lot of buyers out there are comparing them to the ultra low pandemic rates. But if we're being honest, those were somewhat of an anomaly. In fact, if we take a look at this chart here, you can see that 7% isn't really that unusual. And in the 1980s, interest rates were as high as 18%. I mean, even in the early 2000s, 7% was normal. In fact, I drew a line going all the way across this chart at 7%. And you can see from that line, it's somewhat normal to be hovering around that number. Up until 2022, interest rates were in a 40-year bull market headed lower. But since that time, we've actually broken that trend. And as you can see from this chart here, we actually have more room to run on the upside than we do to the downside. Now, I don't want to set the wrong precedent in this video because I do believe that lower mortgage rates are coming in the future. But if you've been watching my videos over the last couple of years, I've been one of those people thinking that that year would bring lower mortgage rates only to be wrong. And that's because mortgage rates are based on more than just inflation. While inflation has been coming down, the job market has remained really strong, even with the Fed's really restrictive stance, which in turn has given the Fed a reason to pause, to more or less back off these Fed rate cuts, which has kind of paused mortgage rates from moving lower and kind of kept them in between the 6.75 and 7.25 range. And while the government's debt continues to go more and more out of control, and the interest payments on that debt continue to go higher and higher, it looks like the Fed isn't going to allow mortgage rates to go much lower without actually seeing a break in the employment numbers. And if you're paying attention to what's happening in the market at all, the employment numbers are continuing to outperform, which leads me to believe that interest rates are likely going to stay a little bit higher for longer. Even though Trump is out there demanding lower rates, inflation is getting closer to the Fed's 2% target, and there's multiple calls for recessions everywhere. For the time being, it kind of looks like 7% is here to stay. And that's why I think buying a home at a 7% mortgage rate is actually a smart move. Because by doing that sooner than later, you're essentially fixing your housing costs. Yes, I realize that property taxes can go up over time. I realize that your insurance can go up over time. But locking in a 7% interest rate today means that you're securing a stable monthly payment. And if you're somebody out there comparing it to renting, rents often increase annually, somewhere between 3 to 5% for most areas. So while it might be more expensive to buy a home today versus rent, when you look out 10 to 15 years where rents are going to be, the earlier that you can fix your housing costs, the better position you're going to be in long term. Imagine you're in your mid to late 20s, maybe even your early 30s, and you're able to fix your housing costs. Chances are you're probably early in your career. You're at the early stages of what you're going to make, the low side of what you're going to make in your job. So if you're able to fix that housing cost now, as your wages increase over time, those housing expenses are going to become less and less of your overall budget. And the reality for most people is that there's likely going to be an opportunity in the future to refinance. Now, you have to assume that you're going to qualify. You're going to have to assume that you have the income, that your property value is going to be there. But assuming you meet all of those things, if you're able to refinance and lower that monthly mortgage payment, then it becomes even less of your overall budget, which basically means by locking in that 7% today, you essentially have 2/3 of the market on your side. Because if interest rates drop, you can take advantage of that. That's on your side. If interest rates stay the same, then there's no harm, no foul. But if interest rates rise, buyers today are going to be happy that they locked in that 7% mortgage rate. Now, I like to use myself as an example here because you're watching me, you in a sense know me, and I bought a house in late 2023, where unfortunately at that time I was buying at the high side in the market when it came to mortgage rates. And so I was able to get a 7% mortgage rate at that time. Now, before I actually made my first payment, which was due on, I believe, January 1st, I was actually able to refinance out of that loan into a 6.5% mortgage rate because interest rates had dropped during that period of time. So I was able to do a no-cost refinance by taking a slightly higher interest rate and letting the lender give me a credit towards my closing costs. And I was able to take advantage of that 0.5% rate. Now, could I have waited and just taken advantage of the 6.5% at that time? Yeah, there's a possibility, but there's also a possibility that the house that I wanted was no longer on the market because it was in a desirable location, because it's a really, really popular floor plan. Chances are somebody would have stepped in and bought that house, just taking it away from me entirely. So I was able to take that 7% down to 6.5% at the beginning of 2024. And so for the better part of 8 to 9 months, I paid that 6.5% interest rate. And then in September of last year, I was actually able to take that 6.5% down to a 6% mortgage rate when interest rates declined at that time, saving myself a full 1% from the time that I originally purchased that home, which saved me over $800 per month. Now, yes, I could have waited, I could have done all of these other things and possibly taken advantage of that lower rate. But again, I might have missed out on that property. Chances are I probably would have paid a higher value for that property when I went to refinance because one recently sold in my neighborhood, same model across the street for $100,000 more than I paid for my house. So by waiting, I could have possibly taken advantage of a lower rate, but I probably would have paid a much higher price in doing so. So the risk is waiting for lower rates that may never come. Now, I do believe they're going to come, but unfortunately, we don't really know the timing. And because there's a lot of unknowns out there in the market at the moment with Trump taking office, on tariffs, on all of these different things that he wants to implement, there's this overall arching feeling in the market between a lot of different parties that the tax cuts, the tariffs, all of these different things are going to once again spike inflation. And if inflation goes higher, once again, then that's part of the Fed's dual mandate. They need to combat that inflation, which means they could actually end up raising rates instead of cutting rates. Which if that were the case, not only would mortgage spreads get worse, but we would also see higher interest rates as well. So we've talked about the advantages of buying now. Let's talk about the risk of waiting. One of those, like we said, is that mortgage rates could actually end up going higher. If inflation remains stubborn, if the Fed changes their stance at all, if mortgage spreads get worse, then there's a high likelihood that we could see that 8% mortgage rate again. At the same time, there's not a high likelihood that you're going to see lower house prices in most markets out there. Now, there are going to be some markets where home prices stagnate, where you see lower home prices than you did last year overall. But for the majority of the nation, we're still in this shortage when it comes to inventory. In fact, at the time we're filming this video, there's only 10 markets that have reached back to 2019 inventory levels. So for the majority of the nation, outside of the areas around the Gulf Coast, Florida, Louisiana, Texas, we're still suffering from really, really low inventory. Now, if you're in one of those markets and you're seeing more and more inventory come to the market, maybe it's a chance for a pause. But like I say, buying a house is never about picking the right interest rate. It's never about picking the right price. It's all about buying when it's the right time in your life. When you're trying to build that foundation, maybe you're starting a family, maybe you're trying to create that security, if you will, and you're financially stable, you have, relationship stability, all of these different things on top of money in the bank, being comfortable with the payment. All of these things matter on top of having that longer term time horizon. That's the right time to buy a house. It's not about rates. It's not about prices. It's about the timing in your life. So if you have all of those pieces together, but you're in a market that you're seeing more inventory, maybe it's a little bit of a reason for a pause, but make sure you're just working with a professional in that market. Let them keep you up to date on what's happening there, because even in some local markets, while some areas are seeing increases in inventory, other areas in that same market are still competitive. You just have to pay attention to what's going on in that market in the areas that you're considering and not viewing everything as one piece. So if you're somebody out there waiting for that decrease in interest rates, it's important to understand that every 1% decrease in mortgage rates adds about 4 million potential buyers to the market, which in turn means more competition. So that drop in mortgage rates doesn't really matter if home prices increase to essentially cancel out any improvement in that mortgage rate. And the likelihood of seeing lower mortgage rates and lower home prices at the same time isn't realistic. In fact, I've had several clients in my career that thought they could predict the market. I have one couple in particular that I talk about all the time that sold in 2019 because they thought that was the peak in the market. They thought that prices couldn't go any higher, affordability had to improve, all of that. Since then, they've missed out on about 70% 8% appreciation in our market, and at the same time have been completely priced out and have no longer been able to re-enter because things went absolutely crazy. Now, that's not normal, and you're not likely to see that going into the future, but at the same time, it just shows you the unpredictability of what's happening out there. And on the flip side, I have people that hesitated at 5% interest rates and ended up buying at 6.5% interest rates on top of paying a higher price for that home because they finally jumped in worried that if they didn't do it now, there would never be an opportunity for them to get back in the market. I know what a lot of you out there are saying, Jeb, you're just pushing people to buy homes because you're a real estate agent. No. I've seen it help a lot of my clients over my career. In fact, the majority of my net worth is sitting in my property, if I'm being honest, and the majority of a lot of people's net worth is sitting in their property. There's a reason that homeowners have a 40 times greater net worth than those of renters. Now, there are other factors in there outside of that home that helps increase that net worth, but the numbers don't lie. And if you're somebody out there, maybe not waiting on mortgage rates, but you're waiting on prices to drop, you need to pay attention to what's happening in the overall market. We still have a housing shortage nationwide. On top of that, we have a lot of millennials and Gen Z buyers out there looking to not only buy their first home, but we have a lot of them looking to buy a second home, a move-up home. And it's important to understand that any seller out there putting their home on the market is likely also a buyer. So for those sellers out there that do decide to list, even though they have super low interest rates, they can either choose to keep that home, which keeps it off the market, or they decide to put it on the market, but they're also taking one off, which means there's really no net gain to the market, which in turn keeps inventory lower than a lot of those years that we saw pre-pandemic. And even in those years, we were complaining about inventory. And there's something I often say, the market can remain irrational longer than you can stay solvent, with this idea that things can stay crazy with prices, with rates, with all of these different things longer than we think they can. And along those same lines, the market actually moves faster than you think in many ways. So by the time interest rates do go down, there's a high likelihood that home prices have already gone up, likely putting you in a worse situation. So as I mentioned earlier, it's not about pushing you to buy a home, it's about buying when it's the right time in your life. Having that longer term time horizon, more than 5 years. I like to say 5 to 7. Somewhere between 5-10 years is a good time to be in a house. That way you can withstand any bumps in the road. If prices were to go down in a couple of years, if you've got time on your side, chances are you're going to be in a good position. I can't tell you how often I sit down with sellers who have owned their homes for a long period of time, and they're surprised by how much homes have gone up over time. And that's not to say it's going to continue at that pace, but I do have a strong belief that home prices are going to continue to go up. If nothing else, they're going to stay at the rate of inflation, which is somewhere between 2 and 3% annual increases. But please understand, buying a home is more than just interest rates. It's about lifestyle. It's about long-term planning. It's about making the right decision for you and your family at the right time in your life. Now, if you're someone just starting this process, not sure where to start, my team and I help a lot of people on YouTube. So if you'd like to work with somebody that's honest, reliable, and go through a stress-free process, do me a favor and click that link below. But that's where I want to reach out to you. What do you think? Are you waiting for interest rates to drop? Or do you see the advantages of buying now? Let's discuss it in the comments. Also, if you found this video helpful, make sure you hit the like, subscribe, and turn on notifications so that you get more videos like this. Thanks for watching. See you on the next one.